Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Today will be Wednesday, the 9th of July, 2025. So before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we kickstart the gist of the daily dose, which is the intraday technical outlook on the four major US dollar pair, the major stock indices, and as well as the two key commodities market, which is gold XAU/USD and West Texas oil. Let's have a recap what has taken shape yesterday in terms of news flow, economic data release, and as well as any particular news flow and economic release that has been released in early today's Asia session before the start of our daily dose, which is at 11 a.m. sharp. Let's and their impact on the various broad-based cross-asset classes. So let us cover this first segment first, all right, before we jump into the intraday technical outlook. So yesterday is more yesterday over the US session, in terms of news flow, not much key economic data release, except that news flow that is much more pertaining to the US trade tariffs, where prior to yesterday, Trump actually extended the 9th of July deadline to the 1st of August. But yesterday he actually unleashed more products and product-based tariff. All right, so US itself has a myriad of different kind of tariffs right now. One is country-based and one is sectorial-based / product-based. That means blanket tariffs on certain sector of category that is applied universally throughout the entire world. All right, so yesterday Trump mentioned that there will be this sectorial tariff on copper over here. All right, so let me expand my screen so you guys could see. All right, so he said to actually has this 50% copper tariff. All right, so we have this 25% tariff on steel. So right now he actually planning to actually introduce tariffs on copper, so that will actually apply throughout the global level. That means it's not based on country. That means any country that is actually producing copper exports heading into US will be slapped by this 50%. All right, and he also indicate that potentially a 200% tariff on pharmaceutical manufacturers. All right, and Commerce Secretary Howard Lutnick said that the copper tariff is likely to be in place by the end of July or maybe 1st of August. All right, so it seems to us that there's going to be a slew of sectorial tariffs that is likely to be announced in these coming weeks, given the rate of this kind of fast and furious announcement. So with such tariff announcement, and also Trump, he did mention yesterday that that 1st of August deadline that was being mentioned yesterday. He did mention that give me a minute, that there will be no extension of this 1st of August deadline over here. So where is this news flow that I want to share with you guys? Okay, give me a minute. I got it open up somewhere earlier on. Okay, let me get it out again. Yeah, this is the news flow that I managed to get it up. Yes. All right. So he said that there'll be no tariff extension. So he voted to actually push forward his aggressive tariff regime, stressing that he will not offer additional extension on country-specific levies to hit in early August. So initially, yesterday, he did mention that there could be a chance of extending beyond 1st of August. But yesterday, he actually came out with a new we call it rhetoric, stating that this 1st of August will be the hard cut-off deadline. Okay, we shall see as the weeks unfold, whether will he starts to actually go back on his hardcore rhetoric again by extending beyond 1st of August. So do not forget, we know that there's this tackle trade that is still in the horizon on the market, which is Trump always chickens out. What happened on 2nd of April, where he has an initial hardcore rhetoric towards his hardline higher trade tariff level, but then after he allows room for negotiation and he kind of kicked the can down the road. So would it be the same pattern again? Well, we shall see. So, but however, yesterday's tariff related news flow doesn't really react quite positively to the US major benchmark stock indices. So it's rather a mixed bag over here. So we start to see the SPX and the Nasdaq 100 close at the unchanged level, almost unchanged, I would say. The SPX marginally shed negative 0.07%, whilst the Nasdaq 100 is down by negative, positive, it's up marginally positive 0.07%, pardon me, and the Dow Jones Industrial Average is the worst performer, down negative 0.37%. The Russell 2000 managed to be the bright spot, adding gains of positive 0.7%. So I would say that it's rather a mixed bag of performance in the major US stock indices yesterday, given this uncertainty that is surrounding these trade tariffs. And also on top of this, there's this particular news flow stating that let me explain. Okay, today means today the start of the US session, which is Wednesday, he did mention that the president hinted that at least 7 more countries will find out their tariff rate in the coming days over here. All right, so we will be releasing a minimum of 7 countries having to do with trade tomorrow morning, with an additional number of countries being released in the afternoon, he wrote in the post social post. Right, so likelihood there will be 7 countries receiving this tariffs called love letter from Trump in today's US session over here. All right, so pretty much interesting to take note of for today when the US session opens. And in terms of the FX market over here, I would say that movement on the FX market is okay. So this is a 5-day rolling performance of the US dollar against other major currency as of now we are speaking. So the very clear performer right now is the dollar yen, which is gaining very strengthening against the yen. That means the yen is the weakest currency right now. So the dollar yen managed to inch up a positive 2.43%, followed by the dollar against the Kiwi, which is up by positive 1.85%, and the rest of it continues to trade in the sideways range. So if you look at the 1-day rolling performance, so that's the 5-day rolling performance. So the 1-day rolling performance, very clearly, the outlier will be the dollar versus the yen. That means the yen is the weakest currency right now. Okay, so the dollar is strengthening pretty strongly. Continues to strengthen in today's Asia session, positive 0.4%, then followed by the dollar against the Kiwi, and the rest seems to be rather muted in a sideways range. Okay, so the reason why the dollar yen is strengthening so much right now versus the rest of the currency, I reckon it's more due to positioning rather than so-called a release of any key fundamental data, because today there's no key fundamental data out from Japan, and positioning in terms of a rather high net speculative position by large speculators in the futures market. So how do I see that? By looking at this, the commitment of traders, we call it index in the Japanese yen futures market over here. Right, so this is actually being compiled by this micro database. All right, so website. So what you could see over here is that this green turquoise blue bar is the amount of large non-commercial net position in the yen futures market minus large commercial hedger net position in the futures market. All right, so what it means that this database, it takes into account of large non-commercial net position in the yen futures. So we know that large non-commercial players are usually institutions, they are speculators, and it minus off the commercial hedger, which is the banks. So if it starts to be in the positive territory, it means that there are rather net long positioning in the yen futures market. All right, so people in the futures market, the institution, after taking into account of those banks, pure risk takers, talking about hedge funds or large individual speculators, they are speculating that the yen strength will strengthen by taking in a much more net long position in the yen futures market. All right, and this net long yen position market is I think the highest in the last 10 years. All right, what you could see over here. Okay, why is it? Yeah. Okay, but every time I go to the cursor, right, it becomes like this. So I let me put the cursor away. All right, so you could see that in the last 10 years is the rather higher right now in the past 10 years. So we have a rather extreme net long speculative yen position by large non-commercial players, which is the large speculators having a net long yen position. And this net long yen position in the futures market is the highest in the past 10 years. So that is easily could potentially any movement in the yen could exhibit cut loss position, and that could potentially explain why the dollar yen is rising so fast in the last 3 days, because market is now betting that the yen will strengthen. So more bets on the yen will strengthen if it doesn't realize, especially in the speculative futures market. Stop loss could be triggered very easily, and players could actually reverse their net long bets, and that could potentially see the acceleration of that dollar yen movement on the upside. So that actually explain to us why the yen is moving so rapidly to the upside in the last few days, despite we do not have any strong fundamental data that is supporting this yen weakness against the dollar. All right. So then thereafter, in the interestingly, in today's Asia session, all right, we have the release of the RBNZ meeting. So RBNZ over here maintain its interest rate as expected, no change, 3.25%. And but I want to highlight over here is interestingly the RBA decision that was released yesterday after our daily dose ended at around 11:50 a.m. Singapore time. So the release was at 12:30 p.m. So RBA surprised the market by keeping rates unchanged at 3.85%. So market is expecting 3.6%, which is a 25 basis point cut. And during the press conference hosted key, or I would say chat by the RBA Governor Bullock at 1:30 p.m. yesterday, he did mention that the reason why RBA hold interest rate unchanged, surprisingly, is due to the timing of a move rather than the direction, because inflation, because of how I put it away, that it's more due to this uncertainty surrounding US tariffs plans over here. So she did also mention that if inflation continues to goes down much lower in the next, I believe next month, you will see the Q2 inflation coming up. The easing cycle will still be in place because RBA still is in the easing cycle over here. So if you look at the inflation trend, yes, this is the inflation trend over here. So what we could see over here is that the trim mean inflation year on year continues to trick down lower, to hit the 2 to 3% inflation target. So if inflation continues to goes down, potentially the next cut of 25 basis point could come in the next meeting in potentially in September or so. Yeah. So but however, with this so-called rather surprising move by RBA by not cutting by not cutting rates yesterday, that actually supported the Aussie dollar. So what you could see over here is that the Aussie dollar managed to actually bounce yesterday right now. So where's the Aussie? So the Aussie dollar now is trading down slightly by 0.29%, tracking up the so-called the Kiwi dollar as well, but managed to hold a key support level at 64.80. So later I'll share with you, yes, despite this intraday move on the Aussie dollar weakness, that means the dollar Aussie is inching up higher in line with the Kiwi dollar, the dollar Kiwi. That means all these rates are using US dollar as a base currency to uniform it. That means if these lines are heading up higher, that means the dollar is strengthening against the respective currency. So despite yesterday's, so you know that yesterday's the dollar sold off against the Aussie over here, this turquoise green line here. Then thereafter we see a recovery right now of the dollar against the Aussie. So later I'll share with you, yeah, despite this intraday movement of plus 0.28% on the dollar against the Aussie, the technical picture on the Aussie dollar still holding above on a key support level. That means no clear sign of Aussie weakness at this moment, despite we see this push up of the dollar strength against the Aussie at positive 0.28%. So later I'll share with you on the technical outlook. All right, do not be alarmed by this short push up in this the chart, because we need to take into account of a bigger perspective. And also, one thing to share with you guys over here is that we start to see a much more better picture of CPI, the inflation trend, consumer inflation trend in China. So consumer inflation trend in China managed to turn around the corner after last month frightened negative print of negative 0.1%. So market is expecting 0% no change level, but it managed to inch up higher. So let's look at the trend of this. Give me a minute, let me open up the chart. Yeah, of this inflation trend in China, because we know that previously China is there's this fear of deflation, which is not good for the Hang Seng indices. So anything that is managed to show signs of turning around the corner, which is positive for the mainland stock market as well. So if you look at the last since February, right, this inflation rate year-on-year basis has been in the negative territory, and this is the first time in the last 4 months it managed to inch up to positive territory, which is a good news, stating that consumer are actually spending, starting not so much, but doesn't we call it deteriorate further at this point in time. But then if you look at the PPI, so PPI is actually factory gate prices. This is where, put away that factory goods are being churned out in terms of their cost price. All right, so it's something like a gauge of manufacturers in China as well. Okay, producer price index. So this producer price index continue to decline in a negative territory, and this deceleration starts to take shape since February this year. So February is at negative 2.22%. Right, then thereafter, instead of inching up higher, it starts to decelerate, negative 2.5 for March, then in May negative 3.3, and in June negative 3.6 year on year. So this is actually the 33rd consecutive month of producer deflation and the steepest fall since July 2023. Driven by rising external risks and uncertainty over US tariffs and persistent weak demand. All right, so over here, if you look into the PPI data, yeah, CPI is good. It's managed to turn around the corner by raising positively, but however, PPI is still continues to remain lackluster. So overall, it's a rather mixed situation in the inflationary trend for China. So that being said, over here, that also causes a bit of a negative feedback loop into the Hong Kong Hang Seng Index. So Hang Seng Index is down by negative 77% after yesterday's so-called yesterday's rise over here. And that being said, over here is that if you look at the other Asia benchmark stock indices, the Nikkei 225 is almost unchanged over here. And surprisingly, what you could see over in Southeast Asia is rather a mixed bag as well over here. So what we could see is the Singapore STI, the Straits Times Index, continue to scale fresh all-time high. So now manage an intraday gain of 0.2%, and it's now rose to 4,056. So another fresh all-time high for the Straits Times Index, given the fact that Singapore stock market is deemed as a more of a safe haven market, driven by component stocks that has consistently give out we call it a consistent dividend inflow and attractive dividend yield. So that's actually representing why the STI is actually holding the fort right now, given a set of uncertainty surrounding the way Trump is going to implement his tariffs, both on a country base and sectorial base. And stretching out to the other Asia market, Australia is down by negative 0.3%. So that will affect that why Australia ASX is down by negative 0.3 is due to that higher copper tariffs that Trump wants to implement, given that Australia is also one of the key exporters of this kind of natural resources. Copper is being part of them, so that will potentially see a negative feedback loop into the Australia stock, Australia, see into the Australia stock market. All right, so that covers the first segment of today's daily dose. Now let me move on to the second segment, which is the intraday technical outlook. All right, so with that, let me expand my screen over here. Okay, so now let me touch on the FX market first. So on the FX market, if we were to look at the, okay, 1 second. On the euro, before we start the euro dollar, let's look at the dollar index. All right, so the dollar index right now is now coming very close to the 20-day moving average, where prices got rejected on the 19th of June. All right, this point in time. And prior coming to the 20-day moving average in today's Asia session, it starts to shape a rather, I call it a spinning top, representing a bit of hesitation by the bulls at this juncture after that rally that's being seen on 1st of July. All right, over here. So this is a corrective rebound. So it appears that this corrective rebound is facing a bit of headway, given the fact that the Japanese candlestick has started to form a spinning top yesterday. So that also represent that some major US dollar pair, the recent 3 to 4 days of rise in the US dollar is potentially showing some signs of hesitation. All right, so this is what I, from a technical perspective, that I want to portray for you guys using the dollar index as a so-called gauge, general gauge of where the dollar direction potentially could be heading today. Right, so with that, we will now take a look at the so-called major US dollar pair at this juncture. So if you were to look at the euro dollar, so the euro dollar yesterday, we do have a bullish bias using 116.85 as my short-term pivotal support, hit our first resistance, come break at the 3 p.m. level, which is the start of the European session. Then thereafter, it trended downwards. In the US session, retested 1.1685 before shaping a minor bounce. All right, so overall the hourly RSI continues to shape a we call it a higher low despite yesterday's retest of that 1.1685. So that also being said, some form of we call it easing off of downside momentum after that retest of that 116.85. So with that, no change, still maintain the same levels for today. That bullish bias still remain for today at 116.85, but first resistance no doubt will be at 117.70. So price action got to break out above 117.70 to increase the odds of another round of fresh impulsive up move sequence, at least on a short-term basis, to come in for the euro dollar to revisit 118.10, 118.25 next on the intraday basis. So however, if price action starts to plummet downwards towards 1.1685, today's intraday bullish bias will be invalidated to expose the next near-term support at 116.30, which is so confluence with the rising 20-day moving average. So at 116.20, I'll be looking out for signs of a bullish reversal candlestick on a shorter term time frame to actually gauge whether there could be signs of a recovery at this 20-day moving average as well, given that it's also a very important technical level. But however, if price action continues to plunge, then thereafter it represents that the the minor corrective decline that is from 1st of July may continues to extend further to the downside, exposing the next near-term support level at 115.80. So that's for the euro dollar, still maintaining our intraday bullish bias for now, using 116.85 as my short-term pivotal support level. Next up will be the sterling pound. So the sterling pound plummeted as expected and almost hit our next second level support at 134.70 as it broke below the 20-day moving average. But what's interesting over here is that upon breaking below the 20-day moving average and almost coming very close to the support level at 130, it's the second support level at 134.70, which confluence with the 50-day moving average, we start to see signs of downside easing of this bearish momentum yesterday, where price action shows a lower low, but the hourly RSI hit the oversold level but show a higher low. So what it means over here is that it suggested that yesterday's downside momentum has started to ease off, and potentially we may now at least see some form of short-term recovery coming back into the sterling pound on the intraday basis. So first support level to watch will be yesterday's pin bar of this long-legged doji hourly candlestick that's being formed on 8th of July at 135.30. And 135.30, if you will do the Fibo retracement of this last impulsive up move from 23rd of June all the way up to 1st of July is the, okay, let me share you guys what I mean by this. Yeah, so it's the golden ratio of 61.8% and the 76.4% confluence with the 20-day, 50-day moving average. All right, and this minor congestion area over here of 20th of June. Okay, so with that, I do not want to use the pivotal support to be so tight at 135.30 just in case of the whipsaw. So I'll use it slightly lower at 134.70. So 134.70 will be my short-term pivotal support just in case of any whipsaw. Flip to a intraday bullish bias for at least a intraday recovery in first step. First resistance level to watch will be a zone for today, which was yesterday's pivotal resistance level, 136.70/136.90. So only a bullish breakout above 136.90 will increase the odds of another round of impulsive bullish up move sequence for the sterling dollar to see the next intermediate resistance zone to come in at 138 figure/138.30. However, if we start to see a bearish breakdown below 134.70, today's intraday bullish bias recovery scenario will be invalidated to see the continuation of this minor corrective decline to seek out the 23rd of June minor swing low area that is conferencing also the medium term ascending channel from the low of 13th of January 2025 low at 133.75. So that's for the sterling dollar. Flipping to a bullish bias stance for today using 134.70 as my short-term pivotal support level. Up next will be the Asia Pacific currency against the dollar over here. So where is it? Yeah, over here. So starting with the Aussie dollar. So the Aussie dollar managed to hit our first resistance yesterday. And if you look at it, then after 65.40, it can't break and traded sideways throughout the US session. And in today's Asia session, it managed to came down but retested the 20-day moving average and also retested the former 8-week range resistance that was previously taken out on the 26th of June. Do a bit of whipsaw prior to the RBA decision meeting. Then thereafter, RBA decision meeting rallied. Then thereafter, throughout the Asia and European session yesterday, it didn't break below the former 8-week range resistance, now turns into a pullback support level and also confluence at the 20-day moving average as well. Okay, so this support level is roughly at this 65.10 level over here. Right, so 65.10 level, first support level to watch, but the pivotal support will still stands at 64.80 given that it can't clear above the 64.40, 65.40, 65.65 intermediate resistance zone. So yes, despite the fact that on the intraday basis, the dollar is strengthening against the Aussie dollar, but the technical chart of the Aussie dollar still shows promising signs of a recovery as price action managed to hold above the 20-day moving average as we are speaking right now, despite the fact that there was an intraday push down. So with that, still looking out for a potential recovery scenario on the Aussie dollar. Hence, we will maintain our intraday bullish bias using the same pivotal support level that we have yesterday, 64.80, which so confluence with the 50-day moving average. Maintain our bullish bias for today. Resistance level to watch on the intraday basis. The first zone will be at 64.40/65.65. Only a breakout above 65.65 may see the next intermediate resistance coming in at 0.66, which is a psychological level as well. However, if price action starts to break down below 64.80, then we are talking about this intraday bullish bias be invalidated, and also the bullish breakout that was seen last week will also be potentially be invalidated as well, given that price action has really reintegrated down back into the previous 8-week plus of range configuration, and potentially revisiting the 200-day moving average, acting as a next intermediate support area or support level at 64.20. So that's for the Aussie dollar. Okay, next up will be the dollar yen. So what I could see on the dollar yen very clearly in the last 3 days, it continues to push up higher, and potentially right now it could be potentially revisiting this complex range configuration resistance top that is in place since 9th of April, which is very close to the 200-day moving average at 149 figure level. All right, so what you could see right now, given the fact that the hourly RSI has also staged a bullish breakout, not the hourly RSI, the daily RSI, pardon me, this is the daily chart. The daily RSI has also staged a bullish breakout above this former we call it a major or medium term descending parallel descending trend line resistance, and has some more room to go before hitting the overbought level. All right, so that also implies down RSI, daily RSI is not supporting a immediate bearish reversal at this juncture, as price action shows the potential to revisit the 149 figure level, which is the upper limit of this complex range configuration that is in place since the low of 21st of April. All right, so with that, I got to respect the price action of the dollar yen as being seen on the higher time frame chart. So for today's intraday, we got to flip to a bullish bias, I would say, over here. So given the fact that it now starts to break above yesterday's US session higher, right? There's this higher managed to break above it in today's Asia session. So with that, I will have a rather tight pivotal support right now, given the latest price action that we are seeing at 146.30. So this level here, not 146.25. So 146.25. Let me put it in writing. Okay, 146.25. Okay, this will be my normal support. Okay, so using this rather tight short-term pivotal support level at 146.25, flip to a bullish bias stance for the dollar yen for today, as it continues to push up towards the upper limit of this sideways medium-term complex configuration, sideways medium-term range configuration that is in place since 21st of April 2025 low. Next resistance level to watch will be the minus swing high of 23rd of June at 148, then thereafter followed by this complex sideways range resistance range top at 148.60/149 figure level. However, if price action starts to break down below 146.25, then potentially it may float back down towards the lower part of this complex sideways range configuration. In first step, two near-term support level to watch will be 145.85 followed by 145.10, which will correspond to the 20-day moving average. All right, so that sum up the intraday technical outlook for all the 4 major US dollar pair. Now, up next will be the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index over here. So the Hang Seng Index continues to trade in a fashion where today there's some form of profit taking over here. So however, a price action continues to actually hold that pivotal support level, all right? And the hourly RSI continues to shape a higher low, right, holding above this parallel ascending trendline support. So with that, no change, given that the support level is still holding at 23,690. So still maintain our bullish bias for now on the Hong Kong 33, representing the Hang Seng Index, using 23,690 as my pivotal support. First resistance level to watch will be at, for today, it should be this today's Asia session intraday high, which is the start of the Hong Kong stock market. opening hour at 24,050. Above 24,050 exposes this minor swing high area of 2nd of July at 24,270 next. However, if price action starts to break down below 23,690, then potentially this intraday slide may extend to retest the 50-day moving average, and as well as the minor ascending channel support that I drew from the 2nd of June at 23,450. Only a breakdown below 23,450 may see a deeper corrective pullback to expose the next near-term support level at 23,060 next. All right, so that's for the Hong Kong 33. Next up will be the Japan 225 representing the Nikkei 225. So the Nikkei 225 yesterday hit our first resistance level at 39,915 before some form of profit taking take shape in today's Asia session over here. So with that, still no change, still watching the 39,390 short-term pivotal support level. And as we are speaking right now, there is some form of bullish candlestick that has been formed, bullish hammer after the 8 a.m. to 9 a.m. Singapore hour bearish Marabuzu candlestick, so indicating some form of negation of that the start of the Asia session bearish momentum. So with that, 39,390 short-term pivotal support remains on the Japan 225. For today, we continues to maintain our intraday bullish bias. First resistance level to watch will be yesterday's US session high, which is at 40,040 level. Okay, only above 40,040 may see the next intermediate resistance to come in at 40,355, which is the minor congestion area of 30th of June and 1st of July. However, if price action have a bearish push down below 39,390, then potentially this corrective decline sequence may extend further towards the 20-day moving average at 39,145. If it can't hold, potentially it may seek out the pullback support, the critical pullback support of that former 7-week range resistance that was formed previously from 13th of May. The medium term ascending triangle range resistance now turns into a pullback support at 38,850. All right, so still maintaining our bullish bias on the Japan 225 for today, using 39,390 as my short-term pivotal support level. Next up will be the high flying Germany 30. So the Germany 30 continues to soar higher, outperforming the major US stock indices yesterday as well. In today's Asia session, hit the 24,260 again, then thereafter it traded sideways. So this was the resistance that we highlighted yesterday. So given that it has already surpassed the previous minor swing high area of this of Monday, now turns into a first intermediate support or pullback support at 24,110. I would tighten my short-term pivotal support level for today. I've raised it higher to the former minor swing high of last Thursday at now turns into a pullback support at 23,930. And if you would do the Fibo retracement of this last impulsive, the most recent impulsive up move from last Friday minus swing low all the way up to yesterday's intraday high, that also constitute with the golden ratio of 61.8%. So using a tightened short-term pivotal support level for today at 23,930, maintain our bullish bias for the Germany 30 above 24,022 above 24,260 may see the next intermediate resistance zone coming in, which is a fresh all-time high area, slightly above the 24,491 that was printed, the previous all-time high that was printed on 5th of June at 24,560/600, which is a Fibo extension cluster level, and as well as the upper limit of this minor ascending channel that is still in motion from the low of 19th of June. However, if we have a bearish breakdown below 23,930, then this bullish tone will be negated to see a extension of the minor corrective decline towards 23,770, which confluence with the 50-day moving average and the minor ascending channel support. Only a breakdown below 23,770 may trigger a deeper corrective pullback sequence to expose 23,570/23,440. That's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30 representing the Dow Jones Industrial Average. So despite the Dow Jones Industrial Average yesterday managed to hold above our pivotal support at 44,170, but price action doesn't gel that well. So after that bounce of 44,170, there is not much of a positive reaction from there. And in fact, the hourly RSI managed to get rejected off below the 50 level mark, and as well as continues to be kept by this descending trend line over here, right? So indicating no clear signs of a upside or a bullish momentum revival in the shorter term. So there could be a risk right now, since hitting the the high on 4th of July over here. It could be potentially undergoing a minor corrective decline within this short-term uptrend phase that is still intact, taken from the low of 19th of June, which is as well over here. So with that, I'll be flipping into a intraday bearish bias for this potential minor corrective decline to play out on the US Wall Street 30 before another impulsive upmove sequence reasserts itself again. So using yesterday's rejection level, which is pretty much close to 44,560, we saw the median line of the minor ascending channel now turns into a pullback resistance, and as well as the former minor swing low of 4th of July broken down on Monday. So 44,560 short-term pivotal resistance level flipped to a bearish bias for a potential minor corrective decline sequence to play out within a short-term uptrend phase that is still intact on the US Wall Street 30. Below 44,170 exposes the next near-term support zone at 43,800/43,600. Next, a breakdown below 43,600 may see a deeper minor corrective decline scenario extending further towards the 20-day moving average, and at 43,290/43,160. Only a bullish breakout and an hourly close above 44,560 will invalidate today's bearish bias to reinsert back the boost for the continuation of the impulsive up move sequence, targeting the current all-time high area at 45,100 that was printed in previously in late December last year. So that's for the Dow Jones Industrial Average. Next up will be the SPX 500. So the SPX 500 also continues to remain lackluster as price action can't break price action on the hourly RSI, on the price action on the raw S&P 500 price movement can't have a clear positive breakthrough after hitting that 6,220 short-term pivotal support level that we have yesterday. And also price action now seems to be also be breaking down by this minor ascending channel as well, where the hourly RSI continues to print a series of lower high after a failure to properly cleared above the 50 level mark, indicating the lack of upside momentum. Right, so with that, the SPX 500 could be also in the midst of doing a minor corrective decline sequence within its short-term uptrend phase that is still intact, as price action going to hold above the 20-day moving average. So with that, using yesterday's rejection level at 6,250 and also yesterday's intermediate resistance level where the bulls can't surpass, so this will be my short-term pivotal resistance level for today, 6,250. Flip to a intraday bearish bias for this potential minor corrective pullback sequence to unfold within its short-term uptrend phase that is still intact. Below 6,220 exposes the next supports level at 6,180, followed by 6,136/6,110, which confluence with the rising 20-day moving average. Only a bullish breakout and hourly close above 6,250 that would invalidate the bearish bias and resume the impulsive upmove sequence to retest the current all-time high at 6,290. Above it is 6,330/6,355. Lastly will be the Nasdaq 100. So the Nasdaq 100 also continues to be rather lackluster, and the price action also yesterday didn't have a proper positive follow through after testing the pivotal support at the 22,600 level over here. Okay, let me put it right here. 22,600 level. Right, and the hourly RSI continues to exhibit a series of lower high and now inch back down the 50 level mark, indicating the lack of bullish momentum. So with that, using this 22,920, which is the current all-time high, that will be my pivotal resistance level. I will flip to a intraday bearish bias for this potential minor corrective decline to play out. First support level to watch 22,600 / 22,510. A breakdown below it exposes the next near-term support zone at 22,360 / 22,235. We also correspond to the rising 20-day moving average. Only a bullish breakout and hourly close above 22,920 that would invalidate today's intraday bearish bias and kickstart another round of impulsive up move sequence, exposing the next near-term resistance level at 23,190, pardon me, 23,190, which is confluenced by a Fibo extension cluster levels. All right, so that sum up the major stock indices intraday technical outlook. So very quickly, let us now focus on the commodities asset classes, starting with gold XAU / USD. So for gold XAU / USD is now showing signs of pulling back again, another choppy price movement yesterday, despite earlier on there was a 50-day moving average clearance. Then it went back below the 50-day moving average and tested our pivotal support right now at 32.93. So what I could see over here is that there is a bullish divergence that is being formed at this point in time. So given this bullish divergence, we will still maintain our bullish bias. So it seems to be trapped within this range configuration. So using 32.93 short-term pivotal support level, maintain our intraday trend bullish, but maintain that bullish bias. But however, it's more like a range kind of configuration for gold XAU / USD now. No clear signs of a bullish breakout yet in the gold price at this juncture. So next resistance level to watch on an intraday basis. So given that it's more of a range configuration, I'll be using the 50-day moving average over here. Okay, now as an intermediate resistor at 32.20 or 33.20, pardon me, 33.20 or 3020. Above 3020 may see yesterday's rejection level at 33.45 coming in next. All right, so for sure the bulls got to break out above 33.60, which is the minor swing low of 3rd of June and 3rd of July, pardon me, 3rd of July. So this is the upper limit of this range configuration over here that is in place since hitting the low of 30th of June. All right, so it's been a kind of a complex range configuration. However, if price action have an hourly close below 32.93 thereafter, then potentially we may see the extension of this minor corrective decline to continue that is still in place from 16th of June all the way to retest the 30th of June swing low area at 32.50. A breakdown below it exposes 32.05 next, which is the minor congestion area of 16th of May and 20th of May. All right, so that's for gold XAU / USD. Still maintain that bullish bias, but it's within a range bound configuration. Next up, lastly, will be the West Texas oil. So the West Texas oil continues to trade below the pivotal resistance zone of 69.15 / 70.60 level. All right, over here, price action continues to like a bit of churning, but you could see. So still looking out for that bearish bias to hold 69.15 / 70.60 because it's still hovering below the 20 and the 50-day moving average. But we do have a downside trigger level for today. All right, over here, which is yesterday's European session low. All right, this level here, which is at 767.80. 67.80. Okay, only a breakdown below 67.80 exposes the next support level at 66.10. Right, so these are two near-term support level to watch. So it seems to be trapping in this kind of complex sideways range configuration as well since the low of 25th of June. Right, over here. So now he hit the upper limit, and a breakdown below 67.80 may potentially float down towards the lower limit of this complex minor sideways range configuration at 66.10. However, if price action continues to shape a bullish breakout above 70.60, then that potentially sees a squeeze up for a corrective rebound move further on the upside towards the next resistance level at 73.60. So 73.60, if you do the Fibo retracement of this last impulsive sell-off from 23rd of June high all the way down to the low of 25th of June, that also corresponds to the golden ratio as well. Right, so that sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the calendar. What are the key data to look out for today as we head into the European session? So it's more of a central bank official speech day for today. So at this 6:40. Okay, at 1:30 p.m. we have RBA official Hunter speaking. So market will be paying very close attention to RBA officials. What is their forward guidance will be after keeping rates unchanged yesterday. And thereafter, we are followed by two ECB officials speaking at 6:45 p.m. ECB Lane, ECB Gandos at 7 p.m. And in the US session will be rather quiet. And after then we have the weekly EIA US crude oil stockpile change that could potentially impact the WTI crude oil price today, 10:30 p.m. Singapore time over here. Then thereafter, we have a rather quiet session as well. So the action will come at 2 a.m. Singapore time, FOMC minutes of the previous meeting. So market will be scrutinizing whether what will be the take light on US Federal Reserve officials' view in terms of inflation trend, economic growth, and anything that they want to look out for during the discussion in the previous FOMC meeting where they keep rates unchanged. So, but very likely there will be any other major surprises because in the last few months, we only see a couple of officials stating that they want to actually cut rates in July. So, but however, the July FOMC CME Fed Watch 2 is now showing a high chance that the Fed will start to stamp pad again. Right, so 2 a.m. something to look out for Singapore time later in the US session. Okay, 2 a.m. So then thereafter, early Asia session, 7:50 a.m. we have Japanese PPI data. So PPI data market is expecting a slight downtick to 2.9% year on year from 3.2% that was printed in May. Pardon me. So that could potentially influence the dollar yen rate. So that will be at 7:50 a.m. early Asia session tomorrow before the start of our daily dose. All right, so that sum up the session for today. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.